Welcome to Investors Insights. We have a lot of information to cover for you today, and our topic is pivotal point. Is this the moment for 2018? Gentlemen, we covered a lot because over the weekend doing research, we had a 600 plus point drop for the week. And so one has to ask, is this pivotal for the rest of the year? One has to ask from the standpoint, is this positive news, bad news, buyer's opportunity, or sellers, get ready. Bears are celebrating, bulls are like, whoa. So, Trey, you started off by saying positive news, bad news. What do you think?
Yeah, so this kind of appears the market's transitioning into good news has become bad news for the market. So good news for the economy appears to be being taken as bad news. We've seen this before. I think back to 2010, 2011, 2013, where what happens is positive economic data pushes up interest rates because higher GDP growth means higher rates, and then gets people worried that the Fed is going to be too aggressive and make a mistake. And so what that does is then people sell out of stocks, sell out of bonds. We see interest rates going up, and that causes asset prices to change. But look at Friday. Great jobs number. We had positive wage growth. Then the Atlanta Federal Reserve came out and said they're projecting a 5% GDP growth in the first quarter.
Right.
That would be extremely positive. The market,
Very
all
positive.
that news, sold off because there's fear that the Fed may be too aggressive. These kind of things typically work themselves out over time.
Right.
So this isn't the end of the world. It's just the market's going to have to give and take on how concerned they are about the Fed. We've got a new Fed president now, and then
Powell.
Yeah, a good Powell name. And so the market, you see the 10-year shooting up 40 basis points, but that's because projected GDP growth is now higher.
Right.
So it's going to work itself out over time.
Yeah, so it may very well be a moment in the year, in this market, but from the standpoint of pivotal in one way or the other, the jury's still out. Right. So Ashley, and you elaborate more. You've done great research, as we talked about. You did a great vlog last week about manufacturing. Mm-hmm. You've emphasized about how shipments are up and trucks aren't available. Talk a little bit more about that positive news that Trey was talking about that ties that together.
Trey mentioned the job numbers, macro being great. And as Bobby would say, if you look under the hood a little bit, the logistics part of that was through the roof. About 10,000 jobs were created either in warehousing or in driving, driven by e-commerce. So, Americans always find a better way to do things. They're doing that in e-commerce, and then you layer in 10,000 jobs that 10 years ago, you wouldn't even see that dynamic.
Right.
This is just in January, really.
It's just in January.
Yeah. So you've got a lot of positive things going on. Yes, we had drama last week in the markets and reaction to different things, but overall the news still looks very good.
It does
as we move forward. And Bobby, of course, the real concern we had emails, phone calls. From people regarding volatility. You want to talk about that?
Yes, the volatility's back, or at least temporarily. But here's reasons why not to worry. Like Ashley said, if you look underneath the hood, the economy is really strong. So you have low unemployment, higher wages. You have consumer confidence at an all-time high, and then strong housing market. And so again, everything's looking good. And just to give you some historical numbers on volatility, let's go back. The S&P 500 experienced an average intra-year decline of 14% from 1980 to 2016. Of those 36 years, 27 of those years, the market ended up. So again, throughout the year, you have volatility, big downturns, but they still ended up. And so it's also important that 80% of the S&P 500 companies are still in an uptrend. So yes, volatility came back. We haven't seen it in a while. We hardly didn't see it at all last year.
Right, correct.
So it's back, but we're not that concerned yet.
Yeah. So we will keep you updated. These markets will continue to move up and down, and there's no guarantees. But what you do need to know is that we want you to be informed and knowledgeable. You can also continue to follow us on Facebook, LinkedIn, Twitter, where you will see additional topics that we are tracking as we put the pieces of the puzzle of this market together, despite volatility, ups and downs. There's no guarantees. This market will continue to bounce around, but knowledge is powerful, and we want you to have it to understand what's going on at that 30,000 foot level. And on those one-on-one conversations, we can narrow it down to your portfolio in relation to the markets. Have a great week. We're going to keep you informed. Thanks again.